Hi, this is Brent with another chart breakdown video for Trade Therapy. Today is Monday, May 12th. We are talking about Tesla, which was our clarity spotlight last week. This is a clean weekly chart from that spotlight. Tesla just printed an almost textbook accumulation structure right here that was really engineered through media-driven fear and defended by volume. And I'll explain what that means as we go. But if we think about this period that we just went through with Tesla, where their service stations were firebombed, headlines were filled with videos of people keying Tesla vehicles. We were told about layoffs. We were told they just had their worst company earnings in history. Elon's distracted by Doge. All of those things just really led to a collapse in retail investor sentiment. And so retail dumped their positions. But what we didn't see is we didn't see a breakdown in the structure. So the tape never broke. This wasn't distribution. This is just Wall Street setting their trap. And we can see volume coming in at the bottom. So what we did not see is we did not see a volume coming in as the structure broke down. We saw it come in at the bottom, which is classic Wyckoff accumulation. Same thing we saw at the beginning of this accumulation structure after Tesla had gone on a massive run and Wall Street was sitting on top of huge unrealized gains that they needed to turn to profit and cash in the bank. A negative headline campaign was created about Elon's purchase of Twitter. We were told that he had paid too much for it. He was selling tens of millions of shares. He was going to be distracted by Twitter. And so we all needed to sell our position, and price dropped from the 400s down to 100. Again, we did not see institutional volume on the way down. We saw institutional volume come in here at the bottom. So when I say that the structure was supported by volume, that's what I'm referring to, where it's accumulation at the bottom, fear, uncertainty, and doubt at the top on very low volume. Coming out of this bottom in 2023, we have this impulsive wave structure right here coming out of the low that led to this ABC corrective wave here that we just went through. A classic Wyckoff accumulation structure where the series of higher lows undercut previous lows to take out liquidity underneath it, series of higher highs that are then met by negative headlines, negative sentiment created in the market to force price back down under the previous lows to buy up the liquidity. But one thing you'll notice is they weren't even able to get underneath some of the lows from late in 2024. So if Wall Street was really that concerned, if institutions were really that concerned about Elon's activities with Doge, we would see volume come in as the structure broke down. We didn't get that. We saw institutions absorb all of this. The structure wasn't broken. It was tested, but it passed. And now some key levels have been retaken. The 200 weekly exponential moving average has held. The point of control has been retaken. And we seem to have made it through this negative period. If I jump over to a daily chart, this is a live chart after hours today on Monday, May 12th. At the time that we wrote the Clarity Spotlight last week, we were on this Friday candle right here. First thing that jumps out at us on this daily chart is how these moving averages are bundled and how the lower moving averages are curling up and supporting price as they cross over some of the higher time frame moving averages. Friday saw a very nice breakout on big volume. We had noticed in our spotlight that there was this inefficient range right here, that there was not a whole lot of resistance right here. And we talked about Wall Street creating the path of least resistance. This is how they do that. It was not surprising to see price continue higher today, taking advantage of this inefficient range right here. So momentum is accelerating. The thin resistance zone right here was the setup. And we talked about how there wasn't a whole lot of resistance going up to this level right here in the 325 to 330 range. So Wall Street's taking advantage of this path of least resistance that they've created while retail investors are trying to figure out exactly what's going on. They were just convinced to dump their positions. And you can see this massive volume that Wall Street just reaccumulated their position once again. I'm going to jump over to another chart that we presented this week, similar to last week when we looked at SOX S and SOX L for NVIDIA. This week for Tesla, we looked at TSLQ and TSLL. We are long TSLL, we are long Tesla, but we looked at did the both short side and long side analysis again, because there's so much you can glean out of this in terms of Wall Street positioning. If we look at TSLQ, which is the short ETF for Tesla, we see price moving up here. We saw an advance as Wall Street put downward pressure on Tesla. They often use these leveraged ETFs to put pressure on the asset, the underlying asset. And that was the case here. But as TSLQ got up into its moving averages, that it's rejecting its moving averages on the way down, and volume increases as the structure begins to break down. Earlier, we were talking about how the accumulation structure, we did not see volume coming in at the top. We saw volume coming in at the bottom. This is what it looks like when Wall Street is dumping their position. This is what distribution looks like, where there's high volume as prices rejecting downward sloping moving averages, and we see Wall Street dumping their positions right here. The opposite to that, or the counter trade to that, is the long side, where you see the long trade beginning to get pressure as TSLQ, as Wall Street pushed up the pressure. You see the long side of the trade beginning to fall, and then you see volume coming in here at the bottom. This is accumulation. This is Wall Street buying up a long position. You'll see that price volume defended this previous low right here. It was able to get underneath this most recent low, but it was not able to get under the low from early in 2024. It did take out some of the inefficiency of this candle here, but you see it recovering now, and you see it being supported by volume. A lot we can learn from this just by looking at the repositioning that Wall Street has just occurred. This is not a neutral reset. This is a sentiment unwind. This is Wall Street exiting bearish exposure and reinforcing long exposure. A lot going on with Tesla. It's an exciting time with Tesla. Tesla didn't just survive through the headlines. It's been built through them. This entire accumulation structure has been built through the negative headlines that have been created. It's been supported by volume. This is how institutions finish the job. They shake sentiment out, they reset price, and then they go to work. I hope everybody got a lot out of our Clarity Spotlight last week. Hopefully everybody's enjoying these videos. If you have any questions, comments, please do drop us a comment, reshare. If you're just watching these videos and you're not reading our content, you're doing yourself a disservice. Sign up for Clarity, read it today.